Hello traders, Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the island. It is June the 11th, 2021, and this is the daily report for gold and silver, our weekend review, and what an interesting week we had with the CPI data coming out showing inflation incredibly hot, up to 5%, a 13-year high. The market, in terms of the safe haven assets, reacted in a most tepid way, actually selling off. They went up a little bit following the report, broke above 1900, but that was unsustainable. What that tells us more than anything else is that many analysts and economists believe that much of this inflationary pressure is temporary. Well, obviously, the market participants are accepting that story. We'll talk about that in detail when we pull up our charts, and the show begins now. Gold prices definitely took it on the chin today, trading off by almost $17 and currently fixed at $1,879.50. What is interesting is that this comes at a time when CPI data was just released, indicating that inflation is at the largest rate over the last 13 years, currently fixed at 5%. What that indicates is, although there was a huge uptick in the rate of inflation, many or most investors and market participants are in agreement with the Federal Reserve's current stance that the majority of these price increases are temporary in nature, such as supply chain issue and the cut in production in many manufacturing facilities. Of course, the next main event that could have a significant and profound impact on the price of stocks and commodities is next week's Federal Reserve FOMC meeting. People will be intently listening to whether there's any mention of tapering their asset purchases. While no one expects interest rates to rise just yet, a lot are saying that it is time to begin to taper. We'll have to see how that unfolds. We're looking at a daily chart of gold futures, the continuous contract. And one of the things is, even with the decline that we've seen in prices recently, no major technical chart damage was formed. Secondly, as we've talked about, we do have a golden cross between the 50 and 100-day moving averages. That being said, the market has moved extremely sideways with an exaggerated range and is now trading towards the bottom of that range and having great difficulty closing above $1,900 per ounce. You can see that we closed above it on one occasion. The following day we opened above it but closed well below it. And then we have a series of 4 highs that just go into that area. Therefore, I would not be surprised to see continued weakness in gold at the beginning of next week. It is for that reason that my recommendation is to remain flat with no active trades in gold or silver for the same reasons, that tight and defined range. Copper prices surged the last couple of days of trading, actually trading to a high last night of $4.59.5 per pound. It is currently fixed at $4.55 per pound. We have 2 legs. The first leg came in at $4.55, so we're at a break even on that. And we added to that position at $4.47, so we have some pretty decent profits in there. The market is also much more bullish, in my opinion, than that of gold. While we had a much more defined correction immediately following copper's rise to a new record high, that of course occurred roughly the first week in May at $4.87. We saw a trade as low as $4.41 in that area. This is these sets of lows here, and closed at $4.55.20 today. The key, as far as I'm concerned, is how well lows coming in have found immaculate support at the 50-day moving average. We'll look at that closer when we pull up a chart. This first chart is a daily chart, although highly compressed to incorporate not only the beginning of 2020, but to also look at price changes during 2019. Because what we can see is during 2019, we basically had a stable pricing in copper. There was variation, but you can see that it is a thinly defined range. January 20 20 begins right here, and that is the point in which we saw a tremendous increase in volatility and price ranges. Because, of course, in the beginning of 2020, we were battling an epidemic, but by the middle of March, which is these lows that come in here, it had blown into a full-blown global pandemic. From there, we saw a steady rise from approximately $2 a pound all the way up to current pricing at around $4.50 a pound. The other thing that we'll notice is that the moving averages are in perfect bullish alignment, with the 200-day below the 100-day, which is below the 50-day. The second thing that is so impressive to me, and we'll go ahead and enlarge this chart to really illustrate this point, and that is that the 50-day moving average has provided traders with a guideline for immaculate support. We can see many occasions when the market came into this area, the lows held at that particular price point. In fact, there was really only one instance in which it broke fairly deeply into the 50-day moving average. That occurred really in October of 2020. And traders, it is the massive infrastructure programs by the European Union, the United States, as well as China that has put copper in a scenario where it is in great demand and supply is diminishing. It is for that reason we will continue to maintain our long positions in copper as well as our stops. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.